Hi, and welcome to the market alert for Monday, the 9th of May 2022. So stocks suffer longest losing streak in 10 years. Long bond battered as Fed cred crumbles. And that's going to be key to going forward for any monetary policy is the credibility of the Fed. And if it's already starting to crumble, then the market's going to let the Fed know. The mess we're seeing in the market is about liquidity. And Friday, of course, was the NFP numbers. April payroll rise more than expected, but wage growth slows and participation rate drops. Not the negative shock bulls we're expecting, but hardly strong either. No, it was an interesting one when the numbers came out. They were strong, as it says they're better than expected, but of course, it's a bit of a paradox, really, because normally you would expect the strong growth in numbers to be a positive for the market. But as I said on Friday, in this case, it's not, because it means it's going to be more inflationary and the Fed will have to raise rates more. So the switched, basically. Shocking consumer credit card numbers. Everyone is maxing out on their credit cards ahead of the recession. Any savings that the US middle class household may have stored away, courtesy of the stimulation checks, are long gone. So, again, we're already starting to see this. We're not even into the recession yet, let alone the food shortages, fuel shortages, and also, the next winter. Anyway, news this week. Today we've got MPC member Saunders is going to speak. Then tomorrow we've got FOMC members speaking. These are lower ranks for both central banks. However, the criminal's out on Wednesday. She's speaking. Lagarde is out. We've got an OPEC meeting as well for the oil sector. Then the biggie of the week for me, the CPI numbers are out on Wednesday. They're forecast for a month-on-month drop from 1.2 to 0.2, which I suppose you'd expect, because a lot of it will have been factored in, I suppose, at this stage. This will be bullish for the market if it is the case. But then on Thursday we head to the UK for quarterly GDP numbers. These also revised down. They may come out lower than that. PPI numbers from the US is the next sort of inflationary one. That's forecast month on month at 0.5, last month 1.4, and then core PPI as well, also down on the forecast there. And then Friday we've just got prelim UOM consumer sentiment. That's also forecast down because we've already seen that drop. And then we've got Mester speaking. So the big one for the week, as I say, keep your eyes on the CPI for Wednesday. Okay, the Dow moving down on Friday following the non-farm payroll numbers. We've got a sort of a triple bottom here that's been created, certainly overnight. Down on Friday, but volume coming in to try and hold the market at Friday's, or the low that we saw here on Friday. And overnight, we've seen the market try and hold the low as well. You can see there, it's already come down, tested, over sold. Market gapping down, actually. It needs to fill this. So again, I wouldn't be surprised if we don't see the market make an attempt to move back to the upside, as we've seen it already come off the low. We are overbought at the moment with some divergence. But on the downside, if we break the low, then we're going considerably lower, because in the daily chart we'll be taking out the lows to the left here. And if we go to the weekly charts, you'll see we've got a low over here going back several weeks, which comes in at 32,230. We can see the last 2 weeks have been heavily traded as well. We've got high volume here, and the market showing this increase. So it's desperate to hold for sure, but if it breaks through the 32,230, then we'll go further south. Difficult to call on this Monday morning, but like I say, the only thing I will say to you is this: watch the low in the Dow, because it's a crucial area. Meanwhile, in the German DAX, the market, as soon as I can find the chart, has already broken the low overnight. A lot of volume and demand on Friday trying to hold this market as it came back to the double bottom there. Well, it was an 89% retracement on Friday. It came back to that level first and then broke, and prices have continued through this and now heading down to this 89% retracement that we have drawn in from here down to here. And then of course we're using the major area now for the pullbacks, so we've got a 62% retracement there as well, along with 78 and 89 here should the market break to the downside. But this low here, very, very important that the market holds. Let's just have a look at that on the weekly chart as well. So it's actually broken there. You can see there, that's the one we're talking about. So from 2 weeks ago, the market is starting to break down there again. Also very high volume here as well on the downside. They're doing the best to hold the market, but watch out for the low that we have here. So it's just drawing some targets on the downside in the weekly chart through the 50. So the 62% retracement there, 13,381. So 13,400. Then you've got the 200 in the way. And then if we get through these, we continue lower. Notice how the market found support at the last time it got to the 200 MA in the weekly chart. So keep an eye on this. Very important to look at those bigger time frames. In the 5 minute for Friday, some nice trades there. We kicked off on the downside. The market's putting in an up move and then finding the momentum disappear as we opened in the cash market selling off sharply till the momentum came back with divergence, and then we saw the crossover of stochastics and the market moving up. We had the market just peak above the high to the left there. Let me just show you this a bit more closer, and then you've got there the market peaking through. We've already got the momentum dropping off, market comes down, spikes back down to the BRN with divergence with a crossover. We then move up and we get the same pattern again here. So we had the market being overbought here, where it's come back, made a new high, and then we had the same thing here, overbought, came back, made a new high, but no momentum. So as the market failed at the 50 bar moving average, it moved lower until it became oversold, divergence, crossover, and then the market making its way back up. And the big bar in there is the release of the non-farm payroll numbers, which you can see there. And again, overbought, short here, and the market finding support but failing to move higher off this, only 25 points, and then stuck at the 20 bar moving average. The Dow opened, and then, as they say, the rest is history, as the market fell down, found support there, and then started to make its way back, but very choppy, as you'll see from the 30-minute chart here. On Friday, the market really stuck in a sideways move there, but overnight, big gap in the Dow, and also already below the low, as the market is failing to hold even at the S1. In the 30-minute chart, the 20 bar moving average is holding still in place. Got to watch the 89% retracement. So let's just go back to the 5 minute, have a look in a bit more detail. We can see the background of the market is weak, and at the moment we've got another 10 minutes before the futures open. So the market's starting to pick up already, trading down to 78.89. This BRN is going to be crucial. If the market breaks this, will go down and retest this level to the left here. So yeah, certainly looking weakish to start with. May get a run to the upside first and an attempt to get the market back up to the low of Friday. And also we've got the gap as well, haven't we, in this market, that generally they get filled. So we'll have to wait and see. And that's just above the low, so that's quite achievable without a doubt. In the currencies, GBP, JPY, Friday fairly quiet considering the news. Demand in the daily chart stuck at 78.89. Very choppy in the 30-minute chart, but 100-point range there, as the market then bounced back again, doing that similar thing that we saw in the 5 minutes DAX. We came back up and then went back up, made a new high, and then made our way back down, and then it just became sideways, and that's how it's been Overnight as well, market stuck in a range of about 15 points there, 25 at the most. Yeah, so not a lot happening there. The pound is really the talk of the town as it continues to move lower. As we can see, if we go down to the monthly chart of the pound, not holding Friday's low, heading down towards 78, down to the 120 level for the pound, and that's because the US dollar continues to move to the upside, which we'll have a look at now. So in the US dollar, we're through the 103.905 on the overnight. We do have a new intermediate high here, so let's get rid of this one at 104. We've actually taken that out now, and we're just trading through that area now, 104.14. So another new high is in place at the moment. A lot of supply there. They're absorbing the selling coming into the market, certainly on Friday. And if we look at a monthly chart of this, we are now through this area of resistance at the 103.905. The next upside target in this, I can't show you in this, I'll find it for tomorrow, but the all-time high is 120, so there's no reason why they're not going to try and keep the dollar looking as if it's got some sort of value, so be prepared for a lot more on the upside in this market. Meanwhile, in the metals, silver being hammered overnight, as we can see Friday also 21.973, 22. Think of that level. If we look at the 30-minute chart, we're looking at the next BRN down, which is this one. This is the 22. Take out Friday's low. I'll have no problem doing this. LBMA fix at 1 p.m. We'll see this market being shoved to the downside. The crucial thing is the market holds at 21.11. If it fails to hold here, we can see we've got a few areas. So from the 21.685 through to that low of 21.11. So there to this low. If that's taken out, then we're going back down to $20, and then maybe even as much as $17 as well. Seems impossible, but you never know, especially with the dollar being able to move back up to 120. This is a complete farce and a joke. Blatant manipulation, as we know. How can you have everything else, including gold, that is way above its 1980 high? So how can you have silver being 60 to 70% cheaper than it was in 1980? The whole thing is just insane, isn't it? Meanwhile, in the gold market, this too suffering today, as you can see, down through the 62% retracement, drawn from here back to here, so under pressure as well, but nothing like silver. And crude oil continuing to move to the upside, which is not going to help with inflation at all. I need to redraw these lines really from here to here, and that gives you your upside target of $118 per barrel if we break through this area convincingly, and also the 115.50. Okay, that will do it for this one. Actually, I've just had a quick thought. Let's have a look at the gold-silver ratio. Well, we're here, yeah, you can see that silver's getting hammered more than gold because it's green. As if these bars are green, silver is being hammered more than gold, and the ratio being divided. You can see we're through this area here, which I've spoken of before, so if we get through here, we'll continue higher. Let's have a look at the weekly of this, and you'll see that the area that we have next is 85.20, and we're not far off that at the moment. And then we've got another area to the left here, which will give us the 100 to 1 ratio once more. And I wouldn't be surprised if we don't go to that as well. Okay, that's it for this one. Let's see what today brings as the markets start to open. Silver continuing to move lower on the other screen. So say watch that 22 level, because it's certainly going to sail through that this morning. If not, it'll do it at the 1 p.m. fix. Okay, that's it. As ever, thanks for watching. See you in the next.